Welcome to this comprehensive exploration of how the blockchain ecosystem is fighting back against maximal extractable value, MEV, extraction through innovative mechanisms. This presentation will take you deep into the technological foundations, economic incentives, and game-theoretic implications of order flow auctions and encrypted mempools. To understand the battlefield, we must first grasp the concept of the MEV ecosystem. MEV represents the profit miners and validators can extract by manipulating transaction ordering within blocks. This extraction has led to a sophisticated ecosystem with multiple participants, including searchers who identify profitable opportunities, builders who connect blocks with optimal conditions, and validators who ultimately process these blocks. The total extracted MEV has surpassed $1 billion, with Ethereum accounting for the majority, highlighting the significant impact on the network. Public mempools have a flawed foundation that exposes transactions to predatory actors. Transparent transaction visibility allows attackers to exploit timing advantages and network congestion, creating an adversarial environment. This environment is often referred to as the dark forest of blockchain transactions, where revealing your transaction intent exposes you to predators. MEV attack vectors are predatory tactics used to exploit transaction ordering. These include sandwich attacks, where transactions are placed before and after a target transaction to manipulate prices, and time bandit attacks, which involve reordering transactions to capture MEV opportunities. Liquidity sniping is another tactic, where bots compete to buy tokens first and sell them at inflated prices. The economic cost of MEV is substantial, with over $1.01 billion extracted across major blockchains. This extraction leads to increased gas usage and transaction costs, ultimately burdening end users. MEV represents a significant market inefficiency, with daily extractions during peak periods reaching $7.3 million, highlighting the need for solutions to mitigate these costs. The solution to the MEV problem lies in transforming public mempools into private auctions through order flow auctions, OFA. This shift involves key paradigm changes, such as moving from public to private transaction details, incentivizing cooperation over adversarial behavior, and transforming value extraction into a competitive service marketplace. Encrypted mempools form the technical foundation for secure transaction processing. They utilize encryption of transaction intent, trusted execution environments, commit reveal schemes, and zero-knowledge proofs to ensure transaction details remain confidential and protected from adversaries. In the OFA workflow, the first step is user intent submission. Instead of specifying exact transaction parameters, users submit their general intent, which is encrypted using public key cryptography. This ensures that only the auction winner can decrypt the specific details, maintaining transaction confidentiality. The second step in the OFA workflow is the auction mechanism. This involves collecting encrypted intents from users and conducting a bidding process where searchers submit bids for the right to execute transactions. The highest bidder wins the exclusive right to execute the transaction bundle, ensuring efficient and strategic execution. In the third step of the OFA workflow, searchers and fillers play a crucial role. They maintain market liquidity, develop complex pricing models, and employ high-performance computing infrastructure to optimize transaction execution. This competition among searchers drives innovation and ensures the majority of extracted value is returned to users. The final step in the offer workflow is execution. The winning bidder decrypts the transaction bundle to reveal user intents and executes the transactions according to the optimized path. This process ensures value distribution according to protocol rules, with results verified against user expectations, providing a seamless and efficient transaction experience. Key benefits of eliminating front-running include cryptographic protection, where transaction data is encrypted until execution, preventing front-runners from exploiting pending transactions. This creates a more secure environment for users, with technical implementations like time-lock cryptography and secure multi-party computation enhancing protection. Rebating, good, MEV to users involves mechanisms that capture value from searchers' willingness to pay for transaction execution rights. This can offset transaction fees, reduce costs, and direct protocol revenue to users, creating a sustainable funding model for DeFi protocols and transforming MEV from a hidden tax into a user benefit. Key benefits of fairer and more efficient markets include minimizing toxic flow, reducing price volatility, and enabling more accurate price discovery. This democratization of MEV access creates a more stable trading environment, aligning incentives between users, protocols, and validators for a more equitable ecosystem. Implementing order flow auctions involves both off-chain and on-chain approaches. Off-chain solutions handle auction logic externally, while on-chain solutions integrate directly with blockchain infrastructure. Each approach offers trade-offs in terms of throughput, latency, and transparency, depending on the specific application and environment. The case study of Flashbots highlights the Suave architecture, which represents a significant offer implementation. It offers a dedicated blockchain for transaction ordering, preference expression language, and cryptographic privacy, enabling cross-domain MEV capture across multiple blockchains and creating a specialized cloud network for transaction ordering. The cow swap case study demonstrates how offer principles can be applied to batch auction mechanisms. This involves solver competition to find optimal solutions, MEV capture that would otherwise be extracted by arbitrageur, and uniform clearing prices, creating a fairer trading environment for larger trades where price improvement outweighs costs. Challenges and limitations in implementing OFAs include centralization risks, solver oligopolies, latency trade-offs, and cross-domain complexity. Addressing these challenges requires ongoing research and development in cryptographic techniques, market design, and governance structures to ensure the benefits of decentralization are fully realized. The future of order flow markets points towards a system where blockchain interactions are based on user intent rather than transaction-based models. This shift enables users to express their goals, align economic incentives, and create a more inclusive and efficient ecosystem, with regulatory considerations ensuring compliance and market integrity. Order flow auctions transform MEV by creating a competitive marketplace for extraction services, benefiting users from the value that would otherwise be extracted from them. As the MEV landscape evolves, technical innovation and ongoing technological arms races drive the field forward, making blockchain interactions more equitable and efficient for all participants.